All good.
Morning.
Morning, mate. How you going?
Yeah, a bit cold this morning.
Yeah, I saw maybe a little bit of snow falling in the Alps overnight.
Yeah, shorts and t-shirt yesterday, beanies this morning. It's that
Yeah,
time of year.
absolutely. Well, mate, market's interesting today. We obviously had a big fall in the US last night, but then those comments from Trump maybe extending his ceasefire. It seems to be he's the only one doing a ceasefire, but extending it to, what, 6th of April?
Yeah, he put 10 days on it, which sort of extended the pain out a bit, and his commentary's been all over the shop. I think markets will be cautiously optimistic, thinking he might find a way out of this. But if you look at Poly Market, it's got 50-50 that that's going to be dragging on out through to May. So, I think the uncertainty is going to be there for a little while yet.
Yeah, definitely. I think the big thing, and I'm looking at our market this morning, we are getting a little bit desensitized to it. I mean, obviously, look, it's great if Trump's sort of, going to do a ceasefire, but he has still got a lot of military either in the Gulf or heading to the Gulf. It sounds like there's a whole heap of Marines going there that would be there for a landing on someone's, taking some piece of land over.
Yeah.
So, yeah, I think that would keep tensions pretty high in my book.
Yeah, I think we'll start to see, you know, we've already seen some people starting to reposition their portfolios for a bit of stagflation, which just means, looking for the opportunities in the environment we've got and taking profits where it's there, which you've certainly seen in gold, and we'll talk about that in a little bit in a minute.
Yeah, absolutely.
Yeah.
So, mate, getting into the market, a couple of things we've talked about over the week. It's just been the flow on costs and products outside of oil that are really being hurt by this blockade. So, do you want to go into that?
Yeah, look, I'll just stick up share screen here with MCOR's one of those ones in particular that's taken a pretty big beating the last couple of days. A lot of words, I won't read it out, but and the main thing for me there was that it buys huge amounts of plastics. Its main suppliers come out of the Middle East, which means its input costs are going to take a bit of a hit, and that's why its share price dropped off. And the other thing is it takes a little bit of time for them to pass those costs on, but they will be passed on eventually. So as a company that
Yeah.
you should see it rebounds. But think that might present a little bit of an opportunity there for someone that didn't own MCOR. What would you be looking at there?
Yeah, I think with the stock sitting sort of around $58, it looks pretty cheap, especially with targets are still, well up into the 70s. And I think once, we do see an end to this conflict, whether it be April, May, June, whatever the time frame is, these components for Amcor, the plastic components, will drop back in price. So we've just got that bit of a lag, as you mentioned, until the costs can be passed through to, their customers. So I'd see it where it is now is probably a low point. Maybe if someone did want to get into MCOR, you can write a $57 put for April and get pretty attractive premium there. That would sort of see you getting into the stock, maybe around 56.50 or even a little bit lower. So I'd see that as a really good opportunity. As I said, we do still see targets into that $70 range. So I feel it's definitely a stock worth trying to acquire at these low levels.
Yeah, I'd totally agree. I mean, it's a very solid, well-run company. I had a client ask about possible repair trade for this one, where you sell two calls and buy a call, sell a call and buy a call spread, basically. I think with the
Yep.
volatility in this one, and you can see where it bounced off its lows pretty hard there. I don't think it's a trade that would suit this stock just yet. I think you'd want to wait to see it get up a bit higher yet before you'd look to try and do something like that, unless you really want it out of the stock. But I think it's a wait for that one. Certainly sell some puts, ease in buying, but I don't think it's right for a repair trade just yet.
Yeah, I think I agree with that. I mean, mid 60s, you might start looking at the repair trade, but I think under 60, writing a put to acquire the stock, if you're in that position, I think would be a pretty solid move. And I would expect over the next 6 months, you'd do very well out of that trade.
Yeah, I'd agree there too. The other one, I put this up last week, but I've changed the strike. So you can see the chart in Woolworths there. It's still jumping up. It sort of seems to have consolidated a bit around where it is. You could certainly and look to sell calls here, 60, 70 cents away from where it is at the moment. You're still going to get 30 cents premium in April, which is 3 weeks away. It's not a full month away. So that's not bad premium for Woolworths. I looked at the deltas, which is quite often used as a proxy for probabilities. So around that 30 delta, you're still going to get you 30 odd cents. So if you didn't do it last week, I think the trade's still there if you want to do it this week.
I think that's a good point. And look, with oil prices and obviously fuel prices for us where they are, I think consumer spending will slow a little bit. We're probably all paying extra $50 to $100 a week in fuel costs, which we're going to see, especially over the Easter period. I think you and I spoke about that earlier. That Easter could be very quiet for travel in Australia, opposed to the normal caravan and camping holidays that we're so famous for.
Yeah.
So I do think our main retailers, I know these Woolies and Coles are generally sort of recession-proof businesses. I think that we will see a little bit of slowing of sales there.
Yeah, I agree. Lastly, I had a few clients ask me about gold, and it's fallen pretty hard. I think a couple of quick comments on it. I mean, gold was very overbought going into the tensions in the Middle East. A lot of people had been buying into the easing interest rate story when we got a bit of uncertainty with the US Iranian thing. It sold off pretty heavily with people taking profits, and it certainly didn't have its usual safe haven status while that was going on. On the left there, you can see it compared to the Nasdaq. They both fell pretty hard, which you don't really expect something like gold to do that. And you can see its sell-off there was equivalent to what happened in 2013 in terms of the volume, or the amount of selling that actually happened.
Yep.
I think gold, if you didn't have it in your portfolio, you could consider starting to look at pricing up, selling some puts in either a gold miner or that ETF. But personally, I think with the flow on from the US conflict stuff, you could see inflation sneak up a bit, interest rate rise a bit, which still takes a bit more shine off gold. I think if you didn't have it
Yeah.
in your portfolio and you want a small percentage, you could start to think about averaging in, but maybe not just yet.
Yeah, I think timing's probably crucial. And look, demand definitely backed off. Gold's almost not behaving, as a historical sort of, it's always been that store of value in times of conflict. It's definitely a different sort of trading beast in the modern era.
Yeah, it's certainly changed its characteristics to what it was once used for. So, and
Yeah.
there's more things to consider with Bitcoin thrown in there and people trying to use it the same sort of way. It's behaving differently again. So I think gold's one of those things you just if you didn't have it, maybe consider averaging in a little bit, but
Yep.
otherwise I'd be waiting a bit longer for it.
Yeah, certainly no rush on that one.
Yeah.
But other than that, I don't think we had too much else we were looking at, was there?
No, that's pretty much it for this week. I think it's not a bad time. I've got a few clients that are having a bit of a look at their portfolio as a whole and starting to think about whether it's time to do a bit of rebalancing going into a rising interest rate environment rather than a falling one. It looks like it's probably oil shocks going to push that a bit harder, I think. And
Yeah.
other than that, not much else jumping out on the screens when there's this much uncertainty around. But yeah, that was it from me.
Yeah, no problem. I think the main theme I'd be watching for in the local market will be we've got three of our four major banks. Well, four of the five, if you include Macquarie as a major bank, are reporting in about a month's time. It's sort of very early to mid May. So they tend to attract a bit of money through April as people start to position, into those stocks ahead of their results. So something I'll be watching for. I thought NAB's pullback over this week seemed a little bit out of character versus the rest of the sector. So maybe it's one to look at. But look, a lot of this is going to be war dependent. And I think if we look at that large amount of trading that went on prior to Trump's announcement earlier this week, there'd be every reason to think that whoever did do that obviously must have some sort of knowledge. It seemed very well timed, but there'd be every reason for Trump to want to continue to talk markets up or to talk the war down. So I am looking for that for a bit of positive rhetoric from the president.
Yeah, I agree. Watching Truth Social, something that I haven't done for a while, but I've started doing it again.
Yeah, it's a crazy time that's how policies run.
That's it. That's it. Have a great weekend. Talk to you again next
You
week.
too, mate.
See you
Thanks for
later.
that. See you, mate.